Hi everybody, this is Luca Disti, Forecaster.biz. Welcome to our weekly webinar. In today's episode, we will deep dive in the using of the new Quantum Screener, which is the tool we presented last week. All of you are so happy in using this new tool. We are very happy to have it on our Forecaster terminal. If you lost the presentation, you can find it on our YouTube channel. I can give you also the link, and if you are watching the recording of the webinar, you can find the link in the description. Here it is. And let me share my screen, because today we will deep dive in the quantum screener, and we will try to use it in order to understand exactly how to use it, of course. Uh, One first thing, very important, we collected all your feedback and we modified just a little bit the quantum screener, because as you probably can notice, we just removed the long short button and we added this new column where you can find both long and short opportunities. Okay, as you can see, you can find long, you can find short, because we decided to listen all your feedback, and we had some question regarding the long short button, because for example, if the average winning percent was 50%, of course you can find a given instrument both in the long and short side. So we decided to filter again and give you only the best trade ideas. Okay, so we do not have anymore the long short button, because of course we can find all the opportunities here in the same page. Did you try the software? Did you try the tool? Did you like it? Are you using it? We are very, very, very excited about our new tool. And so today we can start to do some example, okay? We had many questions regarding how to use it on Forex, which is a very interesting market, because we can use a huge leverage on this market. So we can start from this market, okay? As I told you, we do not have anymore the long short button, because as you can see, we have the column where you have the direction of the trade, and you can find the long and short positions both in the same page. Okay, so let's go with some example. As you know, probably know, you can find the best ideas in the top of the list, of course, and once we find something which is interesting, we can open the specific page and adjust the situation. Okay, so today we will do some examples. You can write your question, guys, and I will come back as soon as possible. Okay, so let's start, for example, with FX. As you can see in the first row, we can find New Zealand dollar versus Japanese yen. We have an 85.88 correlation of the actual price with the 10-year seasonality. The direction is long, 80% winning rate, and an average return of 5.2. The length of the trade is 3 months. Of course, at the moment, this is the only parameter you can choose, because you can choose from 1 month, 3 months, 6 months. We can start with the 3-month example. Of course, you can also choose the asset you would like to search in, okay, the asset class you would like to search in. But let's start with the FX. So let's open, for example, this trade, and what we can do now is something really interesting, because as I told you, we know that the current year, the current price is moving 85% correlated with the 10-year seasonality. Okay? Very, very simple. So we are learning how to use this new tool, because as you know, it was just released 1 week ago, and so we are collecting all the feedback from our audience. Okay, and we are understanding how to use it in the best way. Okay, and for example, what we can do in this kind of situation is something very simple, because if we have a high correlation between the 10-year seasonality and the current price, we can also have a check, for example, of with a 15-year seasonality and a 20-year seasonality. And in this case, what we can find is something very interesting, because we can find that the actual price is very correlated also with other seasonality. What does it mean? It means that this kind of correlation is very consistent, and this kind of correlation is something which means tell us that the probability that in the next month this will be exactly what the prices are going to do. Okay, we have an improvement of the odds in our favor. Okay, because of course we have um, the highest data, which is this one based on the 10-year seasonality, but also having a high correlation with other seasonality can tell us, give us the feedback that this period is a very repeatable period. How can I say? If we can find the same opportunity both in the 10-year, in the 15-year, and in the 20-year seasonality, it means this specific pattern we can find here is consistent in many, many cases. Okay, so this is something I started to do. I get the opportunity as it is, like in this case on NZ, New Zealand dollar versus Japanese yen. I open the page and I plot others to seasonality in order to understand if this data is consistent. Okay, do you understand what I'm talking about? Maybe it's a little bit tricky to understand because I cannot speak in a very good English, but I hope you understand. It's better if we use more than one seasonality, especially if the others seasonality are consistent with the data we are looking for. Okay, perfect. Thank you very much, Karen. It makes sense. Perfect. Okay, so in this case, we know that we are in front of a good opportunity. Okay, the second passage we have to do is try to optimize the trade. So in this case, what we can do, we can find a very good information, which is at the moment the actual price is correlated with the 10, the 15, and the 20-year seasonality. Good, perfect. We have a consistent pattern. We can go to the trade statistics, where we can find that in the last 10 years, we had an average return of 5%. In the last 15 years, we had a return of 4.7. In the last 20 years, we had an average return of 5%. This is a very good news, because also the average return is very consistent. And this is why I really love this pattern, because we have the proof that also in the past, also in the last 20 years, we had this pattern. It's very consistent. Okay, so third step, we can go to the chart here and try to optimize the trade. Let's try to see what happens if we decide to move our trade starting from the end of September, which is where here we can find a low on all seasonalities. And what we can see that the average return grow a little bit because we passed from a 5% of average to 6, 5, and 5.6, which is something which is not very high, but it's very interesting. Of course, we can do the same talking about the end of the trade because in this case, we are already at the top of the trend based on the seasonality pattern, so we can decide not to move it, okay? But if we start from this point and not from today, we have an improvement, okay? So in this case, the next step is moving to the chart, okay? For example, here, of course, if you like this setup, if you like this trade idea, you can just click here on the star, and this specific setup is now in your favorite, okay? If you go here on the menu and you click on the button, you can find favorite, and here it is. You have this specific setup in the memory of the software, okay? Perfect. So what we have to do now, we can go, for example, on the overbought and oversold page, which is the page where we have other statistics. And what we can see in this case is very interesting because look, we have our Wyckoff indicators that tell us if on average we have more buyers or sellers, okay? And what we can see here is something really interesting. Look, for example, here we had a top on prices, but in the same time we had a divergency, and this is something that occurred before an important movement. In this case, we had a bearish divergency because we had prices rising on the chart, but at the same time, the indicators told us that the number of sellers were increasing. Okay, so very interesting. What we can see now is something really interesting because look, we had a rebound here in prices, but look what happened to the indicator. We had a huge rebound, and the number of buyers skyrocketed, and we have more buyers here than here on the top of the chart. Okay, so this is a very bullish indicator. Okay, and look, we have a spike in volume on this minimum. We have a green minimum. I invite you to read the description, for example, for the advanced DPO, where you can find green means a strong buy. And we have an increased volume on all this area, in this minimum area. So in this case, we are in a very good situation for a long trade. Okay. Of course, I have Leandro, the innovator badge, but do I have also the pioneer one? I have both. You can have the innovator badge, which is this one, if you subscribe to Forecaster Terminal before the end of September. And thanks to this innovator badge, you will have the price of the software blocked for all time being. Okay, so you will have the same price forever for our software if you subscribe before the end of September. Okay, thank you very much, Leandro, for you gave me the chance to talk about this this uh, this price we have for our customer. It's something nice. Of course, I also have the Pioneer badge, which is something we gave to all the people that bought a subscription before the end of the last year. So it's something really cool, but it ended. And now you can have the innovator badge if you subscribe to the software and before the end of the month. Okay, so very interesting, very good situation. We have the an interesting moment now in the seasonality and in the quantum analysis screener. Okay, we can uh, save this setup for future use. Okay, now we have to decide, do is it better to get inside the position now or wait, as we can see on this chart, at the end of September and try again? We can have a look to the numbers. If we start today, we can have today or tomorrow an average of 5%. Starting from the end of September, we have an average of a little bit more than 5, let's say 5.5. Okay, so in this case, the best thing to do is going, for example, on a good chart. For example, here we are on investing. You can of course find Forex chart on every website of the world. Okay, open the chart and try to understand if could be the right moment to get inside this trade. We can also plot a weekly chart, and what we can find is very interesting, guys, because look, we are on a very interesting support at the moment. We already had a rebound on this level. Okay, so what can happen in the last days? The price, of course, can go a little bit down. We can expect, as I told you, a minus 1%, okay? And then we can have, of course, a, a long trend, as we expect from the seasonality, okay? Thanks to the fact that the actual prices is really correlated with the seasonality, okay? In my opinion, the best thing to do in this case, we can expect a 1% movement for in the downside. The best way to trade in this moment is just to go long on this trade and calculate the target price and the stop loss. So we can go ahead and we can go inside the market. We can go long on this chart, okay, on this trade, and of course maybe we can split into the position. We can go long now with a half position, and we can add a second half of the position if we have a downturn, a minus 1% in prices. Okay, and we can, let's say, double the position if we have a better situation. Okay, but the important thing in this case, we have to calculate the target price. And calculating the target price for this trade is very, very simple. And you can use it in Forex, you can use this method in stocks, commodities, and everything else, also crypto. Which is the target and which is the stop loss? Very easy, guys. The target is the average of what we can expect here. Okay, if in the last 20 years, in the last 15 years, in the last 10 years, we had an average return of 5%, this is our target price, okay? We can put a target starting from the actual price of a 5%, which is here, okay? 5% is here at 92, 92 for New Zealand versus Japanese yen, okay? So this is what we can expect. In this case, as you can see, our target is just above the highest price for this moment. Okay, here we have a 5%, okay, which is a little bit higher of this high. So the most intelligent thing to do is to put our target on this maximum level here, which is, as we can find here, just a little bit less, 20 pips less than 22, the 92, okay? Easy. If we have an important support or an important resistance which is close to our target, the support or the resistance is the place where we have to put our target, okay? What about the stop? Guys, very simple. If we put a target which is at 5% or more or less, thanks to the fact we can use a very important level on markets, okay, we have to do the same for the stop loss. And thanks to the fact that we already have the odds in our favor, historically speaking, we can set up, we can put a stop loss which will be at the same level like the target price. So we can calculate a 5% stop loss, a little bit less because we reduced the target in order to put it on an important level in prices, okay? So we can do the same here. We can put our stop loss if the target is here, which is 4.77% starting from the actual prices, we have to do the same here, and we can put our stop loss here, 4.77%, okay? And we can move our stop loss here, we can draw it in red, and this is our trade. Risk reward 1, because we already have the odds in our favor thanks to the statistics, okay? If you use this strategy in the long term, you cannot lose money with your trades. Of course, it will happen that you will lose money because everything can happen on the market, but if you use this strategy in the long term, you have the odds in favor and you will gain money. It's like in the casinos, guys. If you go and play at the casinos doesn't change the rules of the casinos if you win, okay? They know that in the long run they have an edge, and if the odds are in the favor of the in the casinos, okay? And the same we can find here with FX and stocks and everything else. We know that we have the odds in favor. We have an edge, and so this is why we can say risk reward 1, okay? Because in the long run we have an edge thanks to the statistics. In this case, we are using the financial market as the casinos use the roulette. They are not changing the rules. If a client win, even if the client constantly win for 3, 4, 5 hours, because they know that they have an edge, but in the long run. Okay? Leandro, shouldn't be the stop loss a little below of the target price? I don't know the general rule. I'm a rookie. Actually, Leandro, let's say in the trading online business, everybody say that it's better to have a risk reward of 2. It means that probably if you watch many videos on YouTube regarding trading, lot of traders talk about a stop loss, which is the the half of the target price. A situation like this one. This is the entry point. This is the target. This is the stop. But what happens if you use this kind of stop loss? It that many times the prices goes like this. Take your stop loss and then goes in the right direction. Okay. This is why we have to use a 1-1 stop loss and target, because we have the odds in our favor. We have an edge in the long term. And this is the best way in order to get this edge in our favor in the long run. Okay? Exactly. Like Scott say, risk reward of 1-1 is fine for this, as it seems we definitely have an edge here. Exactly. When people try to have an edge using a 1-2 stop loss, a 1-2 risk reward, it's because they are not confident with their strategy and they would like to earn double when they earn money than when they lost money. Okay, but in this case we have an edge, like the casinos have at the roulette, starting from the beginning, because we know the data in 1 second. Thanks to the forecaster terminal, we can analyze 20 years of data, and we know exactly that we have an edge in this moment. Okay, so this is the strategy, guys. Of course, we can apply this strategy to everything, that everything on the market, commodities, crypto, forex, indexes. Of course, what you have to do is going and search and optimize the trades and optimize the opportunity we have. Okay, for example, if we go on the S&P 500, and as you know, more index are coming. Okay, for example, in this case, look, let's have a look to the first one in the list. We have a long trade for Regeneron Pharmaceutical. Okay, the actual price is 94% correlated with the 3-year seasonality. Let's have a look if we open it. Okay, very interesting. Okay, we know the actual prices is very highly correlated with the 3-year seasonality, but let's have a look if this data is consistent. Let me see what happens if I add the 5-year. Good, we still have a good correlation. It means the pattern is more solid, the pattern is consistent. Let's see what happens in 7-year. Very good, we have a confirmation. Let's have a look to 10 years. Very interesting. This is a good situation. Okay, because look, we have a consistency pattern. Okay, the uh, the winning percentage drop a little bit. Okay, because look, we have 100% in 3 years, 80% in 5, 57 in 7 years, and 60. Okay, so these 10 years seasonality put us back in the game. Let's have a look to 15. What happened? Good, very high correlation. A little bit of drop, 53. Okay. But we have an average return which increased. So it's still an interesting situation. Let's try to understand if we can optimize this situation. Let's see what happened here if we start, for example, this trade starting from here, the very beginning of October. And the winning percentage doesn't change. We have a little bit of improvement here in the average return. But, for example, in this case, I don't really like this trade, guys, because look, we have 80% of winning in the 5-year, but only, I mean, it's not bad, but we have to check a little bit. Could be better because look, for example, in this case, we have the 2016, which had a negative return, but before to have a negative return, we had a positive return of 12. Okay, so this is definitely an interesting trade. In this case, we are at the 12th of September. We have to wait until the very beginning of October. Okay, so let's have a look to the fundamentals. We have a company which is fairly valued, which is interesting. We have a company which is solid, so perfect. We have no risk of bankruptcy. We have a company which is not manipulating its earnings, so it's a good company. Let's have a look to the overbought and oversold. Look, we have a bad sign here because look, we have a divergency. We have a strong sell situation here. It's in red. We have a divergency. This is the classic stock that I can put in my favorite, but we have to wait because probably talking about the trying to do a prediction. Let's put all the other seasonality. Let's put the 15 and the 20. Okay. Probably thanks to the fact that the actual prices is very correlated to this seasonality, we can probably have a very interesting trade. Okay. Look, we have an average of 4%, let's say, of potential downturn. So if we go here to the chart, we can see a divergency in our indicator here and here. Okay. So if we go to the chart and we try to analyze this stock, okay, we can definitely say probably here we are. If we go here, we can open the chart and we put this trade. We can expect from the actual prices a 5% downtrend. If in this case this stock drop 5%, could be a very interesting trade because look, minus 5%, we will find a price on this support. So it's very interesting. Okay. In this case, if we will find this stock on this support, it will be interesting. Okay. So we saw a difference between, for example, a New Zealand dollar versus yen, which is interesting starting from now because it's already in an interesting place on the chart. Then this new stock, which give us some bearish signs. Okay. Guys, thank you very much. I would like to ask you a favor. If you have 1 minute, please go on Google, digit forecaster.biz, and please write us a review. I already asked you a favor last week, and a lot of you wrote a review on Trustpilot. Please give us a review also on Google, because it's very important to us for reaching as many people as possible all across the globe. So if you have 1 minute, please go on Google, write forecaster.biz, go here on the review page, and please write a review 5 star, please, to us. That's it. Thank you very much, Leandro, for you write the review 2 weeks ago. Thank you very much. We are very happy. You are very kind. I hope all you guys can write a review for us, because it's very important for us. As you probably know, but the Forecaster terminal is used from all across the globe. Of course, we are many in Italy, as you can see, but all across the globe, someone is using it, and every day more people find out our software, find our software, and we are very happy because we have good feedback. Thank you very much, and see you next week, guys. Bye bye.